Good evening, everyone. Welcome all of you all to our LVRC classes, which we are going to conduct for the purpose of revising our topics from the subject of CA Final Indirect Taxes. Today, the topics that we are revising will cover exemption, will cover time of supply and value of supply. Now, as has been our methodology in the previous class also, we'll first revise the provisions and then I'll take few questions from test your knowledge so that you'll also be able to understand how to interpret the question, how to write the answers. That all we will try to achieve by going through the questions. So friends, let us start with the first chapter for revision today. The first chapter is exemption under GST law. Now, when you study income tax, you find the exemption incorporated in the act itself. However, when you study indirect taxes, and presently we are discussing GST, you will find that exemptions are not incorporated in the GST Act. Rather, they are provided as a notification. So all the exemptions are given in the exemption notification issued under both CGST and SGST Act parallelly and under IGST Act for integrated tax related exemptions. So what you have to understand, one major difference is that when something is covered under the Act, the power is with the Parliament because Act is drafted, Act is passed by Parliament. Whereas if something is part of rules, something is part of notifications, it is the power or the prerogative of the government, and these notifications and rules are called as delegated legislation. Now, even though you find the exemption in notification, but again the power should flow from the parent act only. Hence, from the act, you will have to study the relevant section, the relevant provision, which empowers the government to provide for the exemption notification. Now that section is section 11 of the CGST and the SGST Act and section 6 of the IGST Act. Now what it says that the government is empowered to provide exemption by two mechanisms, either by way of a notification or by way of a special order. Now when special order route will be adopted, whenever the the exemption is to be granted to a particular person or to one particular situation. Whereas where the exemption is to be provided in generally applicable to anyone, that will be done by way of a notification. So please understand the difference, that where the exemption is limited to one particular person or situation, it has to be by a special order. Now, when you are giving such type of a restricted exemption, it should arise under circumstances which are of exceptional nature. And what is that circumstance? That also has to be specified in the order. Otherwise, the exemption will not hold good. And obviously, it should be proven that this is in public interest. So I'll give you a small example, though no such exemption was given. But let us say COVID vaccines were designed. Now, out of all medicines, if I have to give exemption only to COVID vaccine, and that too made by a particular company, then that will come by way of a special order. If it is in general for vaccines made by any company, it will come by way of a notification, or in case of goods, it may become nil rated in the rate notification itself. So this is what is the difference, students, between giving exemption by way of a special order, which will be limited to a particular situation, to a particular person, and it has to be of exceptional nature circumstances, then only the government is empowered to issue such special order. Whereas where the exemption is to be granted generally means which can be applicable to anyone who satisfies the condition, not limited to one person, one entity, then it will be given by way of a notification. Now in this, there can be two types of exemptions. One is absolute exemption and the other one is conditional. Now what is the difference? Absolute exemption means exemption which will apply compulsorily. You do not have a choice, you do not have an option of not to take that exemption, not to apply that exemption. Whereas conditional exemptions are those which will be allowed subject to satisfaction of the notified conditions. Now here automatically the exemption becomes optional, because if you do not want to take the exemption, simply by not satisfying the condition, you can be out of the exemption. So this is a difference between an absolute exemption and a conditional exemption. And obviously the exemption notification has to specify for which goods or services, or of what description of goods or services the exemption would hold good. Now, recently, one more section has been added whereby again the power is vested with the government. Now, this is again a type of exemption, but slightly of a different nature. Now, what is this section 11A of CGST and SGST Act and section 6A of the IGST Act dealing with? So it deals with a situation where, because of the general trade practice, a particular commodity or a particular service was either not levied any GST by the trade and industry, or it was levied GST at a lower rate. But that was the common trade practice, which over here they are mentioning as generally prevalent practice. Now, why this happens? Because see, GST is a new law. When we transitioned from earlier excise, VAT and service tax to GST, many people, in fact the entire industry, with relation to specific goods or services, were having an understanding that okay, either this is exempt. Why? Because it was exempt in the previous law, or it is taxable at a lower rate. Why? Because it was taxed at a lower rate in the previous law. Now, despite of GST being a new law, the industry, that is a majority people in that particular sector, interpreted the GST provisions in the same fashion, taking either the GST rate as zero or exempt, or taking it at a lower rate than what it should have been. Now in such cases, what will happen today? When the notices will be sent to them by the department, they would be called upon to pay the difference. However, if it is proven that this was a generally prevalent practice, means majority people in that sector, in that industry, were of the same understanding, then the government is empowered that they may exempt this full or differential amount from tax which was otherwise payable. And how they will do this exemption? Again, by issuing a notification. So there was a practice because of which people were either not levying tax or levying tax at a lower rate, whereas these supplies are taxable at a higher rate. And to overcome this anomaly, that okay, now whatever you have done in past, we will not collect that tax from you. The government may by notification give exemption to the earlier period dues, so that unnecessarily the industry may not come into any problem. So these are the two sections from our parent law which empowers the government to grant exemption by way of notification, and in the first case even by way of a special order. Now we have a list of these exempted services. Let me tell you friends, in our syllabus list of exempted goods is not there, so you need not worry for preparing for that. You have to only prepare for the list of exempted services. So we'll be studying these lists, and then as per the availability of time, we'll go to few of the practical questions as well, so that you will get an overview of how to handle different types of questions from that particular chapter. Now, the first exemption, an important one also for exams, is exemption for charitable activities. Again, here I would like to make a comparison with income tax law, because even this entry refers to section 128812 AB of Income Tax Act. There is a big difference. Under the income tax law, if you are registered as a charitable entity under one of these sections, Then under income tax law, the definition of charitable purpose is much wider. And over there, any activity conducted by these registered trusts are eligible for income tax exemption with some monetary limits and some conditions. Now, many times when you have studied that income tax provision parallelly, because that is also part of your CA final syllabus, and then you study this particular GST exemption, we try to draw parallel. And many times I've found student try to apply the same analogy of income tax that, okay, since under income tax, charitable activity will cover any type of activity which is for general public utility in charitable purpose. So same analogy, you presume that applies in GST, but that is not correct. GST also refers to the same charitable entities who are registered under income tax, and they make only those charitable entities registered as per these provisions of income tax eligible for the GST exemption. To this extent, both the laws are same, but a very big difference is that only the charitable activities which are defined here under the GST notification, this exemption notification, those limited charitable activities are only exempt and not all charitable activities. So this is what is the difference that you have to keep in mind, that all charitable activities, like how you find it in case of income tax law, same thing is not applicable over here. Next exemption, students, is for services which are provided by a person. Now, in this first service is by way of conduct of any religious ceremony. So, all our religion and culture have different types of ceremonies, either at the time of birth of the child, or at the time of marriage, or at the time of death of a person. So, we have different type of religious ceremonies associated to all these life events. Now, the person who conducts this ceremony, we say that is the priest, the dharma guru, and they charge some remuneration or fees. That is what has been made exempted over here. Secondly, the second exemption in this entry is covering the renting services which is given again by these trusts, these institutions, again which are registered under these sections of the Income Tax Act. So if you are a registered religious entity and you are registered under one of these sections of the Income Tax Act, or you are covered under this section of the Income Tax Act, then whenever you give your premises on rent, premises which are meant originally for purpose of religious purpose, because you are registered as a religious trust, and you are maintaining some property which is given on rent, that rent is eligible for GST exemption. Now in this there are some monetary limits. If rooms are given, like we say dharamshala, so the rooms which are given, if the rent is not exceeding 1,000, then it will be exempt. If the rent is 1,000 or more, it will not be exempt. So up to 999 per day, if the room rent is charged by these religious entities, the rent will be exempt from GST. Second, where they give community halls or kalyana mandapam. So you want to conduct some religious ceremony where you are inviting multiple people. So you require a hall. So many times these charitable trusts have open spaces. They have constructed rooms which can be used as a big hall for conducting any of your religious functions. And they charge you again some remuneration for that. So where the charges for that hall do not exceed 10,000 per day, then it will be exempt. If it is 10,000 or more, it is fully taxable. And third, when these religious trusts, they give any shops on rent or any commercial places which will be used for your businesses on rent, then again that will be exempt if the per month rent is below 10,000. So mind you students, for rooms it is per day, for community halls it is per day, because these two things are generally taken on rent on per day basis. But shop nobody takes on rent on per day basis, it is always on monthly basis. So for shop the monetary limit given is on monthly basis. Fine. Then comes the third activity which is covered over here under exemption, that is the services provided by the KMVH and the Hajj committee. Now these are relating to what? These are relating to conduct of religious pilgrimages to two major places. One is to Hajj and the other is to Kailash Mansarovar. So for these two religious places, as you all would be knowing, these two fall in different country. So our government has created these two specific bodies which coordinates and conducts this entire yatra, and you have to pay charges to them. That charges is exempt. Next, another exemption in this same category is of training or coaching. Now here there are two entries. First, where the training or coaching is in recreational activities, and that too relating to art or culture. So if somebody is teaching you tabla, if somebody is teaching you Bharatnatyam, so these are recreational activities first, and second, they are connected with art and culture. Then the fees charged by such individual who is teaching you any of these cultural art forms, that is exempt under GST irrespective of monetary amounts. And next, where again a charitable entity which is registered under 12A AB of Income Tax Act, if it is conducting any sports coaching. So we have in every city you have cricket training academies, you have football training academies, basketball, skating, any of these sports. But if those academies are run by private individuals or companies, it is taxable. If they are run by charitable entities registered under 12AA AB of the Income Tax Act, then whatever fees they are charging for these activities, coaching will be exempt under GST. Then students, the next category that is again very important for your exams is the agriculture services. Now here I would like to clarify something because many times this is the confusion. Whenever we use the word agriculture, what comes in front of our eyes and in our mind is the agricultural goods like all types of food grains, all types of vegetables, fruits. Now, all these are agricultural produce. They come under the category of goods. Here, we are not talking about whether those agricultural produce are exempt or not, because our syllabus covers exemption for services. Yes, within agricultural produce, there are exemptions subject to some conditions of packing, of labeling, but we are not discussing that. That is not part of your syllabus. What is important to be noted here is, since we are talking about exemption of services, here we are going to discuss those exemptions which are related to some specific services which are carried out in relation to agricultural produce. So yes, agricultural produce reference is there, but we are not talking about exemption of the goods. We are talking about exemption of services relating to those goods. So what are those services? So loading, unloading, packing, storage, warehousing of rice. Now rice in any form, whether in the form of agricultural produce or in the form of manufactured item, like how we find rice today, which is polished, which is already treated for various things. Those rice which are manufactured are not agricultural produce, but even for those rice or even for agricultural produce rice, if you carry out any of these services, the service remains exempt. That rice may or may not be exempt, but the service relating to that rice is exempt. So keep this particular point in mind, that even for the packaged rice that you are getting, if any of these services are performed, loading, unloading, packing, warehousing, that is exempt even for the packaged, which I also call as manufactured rice, which is not an agricultural produce. Next, warehousing of minor forest produce is exempt. Then again, similar service like storage, warehousing, now of what? Of cereals, of pulses, of fruits, of vegetables. Then artificial insemination of livestock, that is also covered in the exemption. Here again, similar to your income tax law, if you remember, even in income tax law, when they are talking about livestock or animals, they are always excluding horses because horses have a separate treatment. If you recall, maintaining of race horses has a different category. So treatment over there even for maintaining race horses is different. Similarly here, the activity of artificial insemination of livestock is exempt, but not for horses. Next, if you are carrying out any intermediate process which is in relation to cultivation of plants or rearing of animals, etc., So you are carrying out some intermediate product process, which is part of the overall agricultural process activity. So if this is outsourced, it is done on job work basis, that will also be exempt. Besides this, following activities carried out for agricultural produce will be exempt. First, growing of the agricultural produce, which is the agricultural operation itself, is exempt. Then, if there is some manpower agency which is supplying labor, now see, manpower agency, when they provide labor or workforce, it is a taxable activity for them. So when they supply for construction, when they supply for manufacturing, it will be exempt, taxable. But when they supply for farm, that is for doing agricultural work on farm, that is what is called as farm labor. So the same manpower supply agency will be eligible for exemption to the extent of service of supply of manpower relating to agricultural activity, where that manpower will be called as farm labor. But when they will provide for other purposes like for security, they provide security personnel, or in construction activities, all that is taxable. Next, where certain processes or activities are carried out on the agricultural farm itself. And again, these activities are some part of the overall process of the agriculture. And these activities do not change the characteristics of the agricultural produce, but are only required to make it marketable. Such activities carried out at the farm is also exempt. Next, where some tractor or any other machine required for carrying out the agricultural operations, if it is given on rent or lease, the rent charge is exempt. Similarly, where the agriculture land itself is given on rent, the rent for the agriculture land is also exempt. Next, loading service, packing service, storage and warehousing service relating to those items which fall in the definition of agricultural produce, agricultural goods. So this will definitely not cover the packaged items, because packaged items do not fall in agricultural produce. Next, agriculture extension service. And next is, in India, you sell your agricultural produce by bringing them to a specific marketplace, which is generally called as APMC. So this is the committee or board created by the government, and all your agricultural produce is sold here. So whatever commission, whatever charges this agriculture market produce committee is charging to you, or if there is a commission agent, which is again a common feature here. So whatever commission you are paying to that commission agent, all these activities, all these services are exempt. Then comes, students, the third most important category of service for your exams is education service. Now, interestingly, even though here we are calling it as education service, the law has not defined education service. In fact, it has defined educational institution, and then it says that any service which the educational institution is giving, that will be exempt. So interestingly, here any service given by the educational institution may or may not be directly related to education. Makes no difference, because here in this entry, education service is not defined. Only the educational institution is defined. Now, who is covered in the educational institution? One, preschools. Second, schools up to the 12th standard board. And third is the schools beyond that, like you can call them as colleges which provides you degree. And last is vocational training institutes. Now, in all these, the first three category, preschool, school, right? First two, sorry, maybe in any curriculum, Indian curriculum or even international curriculum, that is called as educational institution, and their fees are exempt. But when you talk about school beyond standard 12, which we call as college, for college or the degree courses, only the degree courses which are run by under the laws of India are only eligible for exemption. So if any foreign degree course is being run, that is not eligible for exemption. So just keep this in mind. Up to 12th standard board, all schools, whether foreign, that is national or international, all are exempt. Beyond that, only colleges which are under Indian laws are exempt, but which are providing any qualification or curriculum which is under some foreign board or university, those colleges fees are not exempt. Now, any services which is provided by these education institutions, to whom? To their students, to their faculty, that is teaching staff, and to their other administrative staff. All these services, whether it is education, whether it is boarding, whether it is bus, whether it is food, everything is exempt. Second, where these education institutions charge you fees for conduct of some entrance exams. So as you know, that many times before joining a college, before joining an institution, there is some entrance exam, and for which there is a fees 500,000, 2,000. That fees is also exempt. Now, that was outward service provided by education institution. Now, similarly, education institution may be taking some inward services. Now, on the outward side, all services provided by education institution to school, to students, to staff, and to faculty are exempt. So on outward side, there is no list of services given. Only who is giving to whom is important. So education institution giving to their students, staff, or faculty, any service is exempt. But when you come to inward side, the list is specific. Only these specific services received by the particular education institution will only be exempt, and not all inward service. So on inward side, there is a restriction on what services will enjoy exemption. So what are these services? So services which are received by the education institution, what are these services? First, transportation of their students, faculty, staff, catering service including midday meals, security, cleaning, housekeeping. Now, all these services are eligible for exemption. What is the criteria? These exemptions are only applicable to institution providing services by way of preschool and education up to higher secondary. So these three services will be eligible up to standard 12 schools. This will not be eligible if these services are taken by colleges or by vocational training, even though they are education institution, but these services taken by college or by vocational training institutions is not eligible for exemption. Next, services relating to admission, conduct of exams by such education institution. This inward service is exempt. Next, supply of online education journal. Now, this exemption is again only limited to one education institution. Which one? To institution which provide services by way of education as a part of curriculum for obtaining qualification. In short, colleges. So where this inward service is taken by some college, that is exempt. So this inward service, what is that inward service? Online education, journal or periodicals. If this service is taken by a school, it will not be exempt. If it is taken by a vocational education training institute, that is not exempt. This is exempt only where it is taken by colleges. Please keep this particular point in mind. Next, services of affiliation provided by central, state, educational board or a council or any other similar body by whatever name called. So all of these schools and colleges, they are affiliated with some or the other body created by the government. So they have to pay affiliation fees. That is also covered in the exemption. Next, students, we come to another very important service, again important for your exams, that is healthcare. Now, unlike education, where education was not defined, in healthcare, they have defined the healthcare service. So in healthcare, two things are very important. One, who is providing the service? Same like education, over there also who is providing was important. Here also who is providing is important. Here who should provide the service? Either a clinical establishment, in simple words a hospital. Second, authorized medical practitioner, in simple words a doctor, or paramedics. What are paramedics? Paramedics are those trained professionals who are not doctors by qualification, but they have acquired training for carrying out activities relating to the medical field. For example, they are physiotherapists, they may be nutritionists, they may be lab assistants. So these are paramedics. So when service is provided by any one of these three, it will be exempt. First condition. Second condition, the service should be healthcare service. Now, what is healthcare service? Healthcare service students is defined under this notification as the service which includes diagnosis or treatment or care. So any one of these three is healthcare, but condition is it should be provided in relation to one of the recognized forms of medicines in India. Now, what are the recognized forms of medicines in India? For that, we have the short form Ayush. Now, what it covers? It covers allopathy, it covers Ayurveda, it covers Unani, it covers yoga, it covers naturopathy. So these are the H is Siddha and H is homeopathy. So these are the various notified or the approved fields of medicine. If you have taken treatment, if you have done diagnosis, or if there is any care provided in one of these approved mediums of medicine approved in India, only then the service will be exempt. Now here, in simple words, if you are admitted to hospital, then whatever the hospital is charging will come in exemption. If you go to a doctor, whatever the doctor is charging will come under exemption. If you go to a physiotherapist, or if you go to any lab for doing some type of blood testing or for getting some CT scan or MRI, all these are exempt. Now here, one exception has been carved out. Only one amount which the hospital charges you out of the total bill, one amount is taxable. What is that amount? Room charges. But when this room charges will be taxable, if the room charges are exceeding 5,000 per day. So if your hospital bill, which definitely will have room charges because you are admitted for treatment, in that case, if the room charges are more than rupees 5,000 per day, that room charges are taxable. Again, exception to this condition or this point is if you are admitted in one of these types of rooms, ICU, CCU, ICCU, NICU, then even though the charges are above 5,000, they will not be taxable, they will remain exempt. So, first point, in case of hospital bill, room charges, if exceeding 5,000 per day, they are taxable. Exception to that point, if the room is one of these, then irrespective of the amount of charges per day, it will remain exempt. Further, in this service, the service of transporting the patient in ambulance is exempt. And similar to humans, you also have the veterinary clinics for birds and animals. Those clinic charges are also exempt. Next, students, we come to the services which are provided by government. So we have exemption on both sides, services provided by government and services received by government. First, we are studying services provided by government. Now, when the governmental authority is providing any service which is related to a function which is entrusted to them under Constitution. Article 243W, 243G has a big list of various activities which are the statutory functions, which are the sovereign functions of the governmental agencies. So when a governmental agency is carrying out one of those functions, which is a sovereign function, which is a statutory function, why? Because it is put in the Constitution's Article 243W or G, that is what is exempt. Next, services given by government are exempt, excluding. So when we say excluding, it means these are those services which are taxable. So please be clear. So first is, other than these four, all other services will be exempt. These four are taxable. What are the taxable services? First is services given by Department of Post. However, if you see, for post, within post, there is one service which is exempt. That is the service of postcards, inland letters, book post, ordinary post, where the envelope does not weigh more than 10 grams. So these services of post are exempt. Other than that, services by Department of Post or Ministry of Railways, that is Indian Railway, is taxable. Again, in railway, we'll find a separate exemption where non-AC and sleeper coaches are exempt, only AC coaches are taxable. But firstly, in this general exemption provision, they have removed railways, they have removed posts, so that in general, railways and posts are not exempt. Only where a specific exemption is given, like we studied one for post and there is another one for railway, only those are exempt. Other than that, all other services of post and of railways will be taxable. Similarly, another service given by government which is taxable is where the service is given in relation to the aircraft or vessel, and whether given inside or outside the airport or port. Next, transportation of goods passenger done by government. Again, there is another exemption for that. But firstly, they have removed it from general exemption. So for the time being, you can say these services are taxable. And if there is a specific exemption where only one of two items are made exempt, that will be exempt. And then any service other than the specified services, if given to business entities, that will be taxable. Now, further, what is exempt is where the government, either central, state, local, is giving to a business entity. Which business entity? Which is having an aggregate turnover which is below the registration limit. So here the language I'm interpreting or giving you the simple language for that. So if a business entity's turnover is below the registration limit in the previous year, then let us call such business entities as small business entities. So for the time being, I'm using a terminology not used in the law, but for your simple understanding, small business entity. Who are small business entity? Whose last year's turnover was below the registration limits, which you study in the registration chapter. Now, services given to such business entities will be exempt. Exception to this is only one where specified services, which we studied above ABC, are given, or renting of immobile properties given. Only these two are taxable services. Other than that, services given to small business entity by the government will be exempt. Next, services provided by one government to another government will be exempt. Again, in this, the above ABC will be taxable because they are specified. Next, where the government is giving service to big business entities. So small is exempt, big is taxable, but within big entities, if the value of the service is up to 5,000, that will be exempt. So government giving services to small entities is always exempt. Government giving services to large entities is taxable. Within that, if the value of service is up to 5,000, that will remain exempt. Remaining service will be taxable. Next, next is service by government entities in the form of giving grants. So we all know government give grants to various government bodies, entities, that is exempt. Next important service, you should keep this one in mind, that where the government is running a old age home. Now, either it is run by government or again it is run by the charitable trusts which are registered under the Income Tax Act. Now, when they are running a old age home, then whatever charges they are levying on those members who are aged 60 or more, so let us call them as senior citizen, and the consideration for such stay is not exceeding 25,000 per month per member, that will be exempt. So where the government is running a old age home or a charitable trust is running a old age home where people of 60 or more age are residing, and their per month charges is not exceeding 25,000, that is exempt. If it exceeds 25,000, it will be taxable. Next, now we studied in the above point that Ministry of Railway is not coming in the blanket exemption. So it is taxable, but within Ministry of Railway, few services given by them will be exempt. So platform tickets exempt, retire room, waiting room, many times they charge you some 50 rupees, 100 rupees per hour, that is exempt. Clock room, where you are allowed to keep your luggage if you want to go out for some work. And within stations nowadays, for taking people from one place to another on the station, battery operated car services are given. All these are exempt. Next, let me take some important ones. Another service given by government which is exempt is service by way of giving passport, visa, driving license, birth certificate, death certificate. Now, so for all these services, whatever charges they are levying, that is exempt. Next, if government is providing you service, how? In the form of deputing their officers after office hours or on holiday. Now, this is generally at the customs. So let us say there is some custom import has come and you as the importer want it to be cleared urgent basis. So even if there is a holiday, you request and for you specially to inspect your goods, your container, staff, that is the custom officers, are made to work on holidays or even after their normal working hours. So for that, the customs charge you some additional amount. That is what is exempt. Next, relating to construction service, what is exempt? First is pure labor contracts. What is pure labor? Where no element of goods is involved, only the labor service is involved. So where only labor service charges are involved. Now, this will be for what? For construction, erection, commissioning, installation, repair, fitting, etc. Of what? Of any civil structure or any other original work relating to beneficiary-led individual house. So, if you all know, government has a mission that everyone should have their own houses. So for that, anyone providing pure labor contract for constructing such house or for erecting such house or installation commissioning under the Housing for All mission or the Pradhan Mantri Awas Yojana, that will be exempt. Next construction service which is exempt is services given by the electricity distribution utility. So we have the electricity generating companies. Similarly, we have the electricity distributing companies. So when these electricity distribution companies are giving service, now with service of constructing, erecting what? Electricity distribution network. So they are laying the poles, they are setting the entire cables so that the electricity can reach to the tube well of the farmer or agriculturist. So where you go to the electricity department, ask them to install a special line up to your farmland so that you can run the tube well. The charges for that are exempt. Next, pure labor contracts again for construction of what? Of a single residential unit. So you are getting one row house constructed, one bungalow constructed, one standalone house constructed. That is exempt. It should not be a commercial complex or a residential complex. So complex construction services are not exempt. Next, again important for exams, service of transportation of passengers. So when you are traveling, the transport service is what is covered over here. So what is the service? The transport service is first air transport. Now see students, the general logic is services by common man are what are exempt, but common man will not be using air, correct? However, why air is exempt? Because here government wants to promote the air transport of specified airports because government wants to promote those areas or those airports. So if you are traveling by air in the economic class and either the starting point or the ending point of your air journey is one of these places, entire state of Arunachal Pradesh, Assam, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, or at this particular port, which is located in West Bengal, then the air journey charges will be exempt because government wants to promote these airports. Then besides that, all common man transports are exempt like non-AC contract carriage, similarly non-AC stage carriage. So all your services of taking a bus, a rickshaw, all are covered over here by way of exemption. Similarly, what is covered as exemption is services of railway. So when you book a ticket in railway for railway travel, that is also exempt. However, in that, if you are booking a first class or an air conditioned class, only that railway fare is taxable. If you are booking a general class or a sleeper class, it will be exempt. Further, tickets of metro, monorail, tramways are exempt, inland waterways exempt, public transport, which is not for tourism but for your day-to-day travel by a ship between places in India is exempt. And then metered cabs, auto rickshaws, including e-rickshaws, all these are exempt. However, important point is when you are booking these cabs or rickshaws through some app, that is not exempt. In that particular case, the app is required to pay tax under section 9(5). So when you are doing Ola, Uber, Rapido, that is what is taxable. But if you're directly booking a rickshaw or a cab without using these apps, that is exempt. Within GTA, service by road transport, that is what is covered over here. Now, first rule is that transportation of goods by road is exempt. However, exception is GTA and courier. So if you are transporting your goods by GTA or by courier, it is taxable. However, within GTA, we'll see a list of exemptions where transport done by GTA is also exempt. But first rule, GTA is not having blanket exemption. So transport done by GTA or by courier will be taxable. What? Transport of goods. Similarly, what is exempt is transportation of goods by inland waterway. Now, exemption is given for transport by GTA, as I was saying, plus by railway or by ship of some specified goods. What are they? Agricultural produce, milk, salt, food grains. Now see here, milk, salt, food grains is kept separately, which means they may or may not be in the form of agricultural produce. Even if they are in packaged form, their transport is exempt. Organic manure, newspapers, magazines, which are registered with Register of Newspaper, defense or military equipments, and relief materials. So all these things transported either by railway or by ship or by GTA, all are exempt. Next, where service is provided by GTA to an unregistered person, including unregistered casual taxable person, is exempt. However, if service is provided to one of these who are registered under some or the other law, that is taxable. So if GTA is doing service for factory or society, cooperative society, body corporate, partnership firm, all these are taxable. Next, where GTA is providing transport service to whom? To any department of government or of local authority or to government agency who have taken registration only for the limited purpose of doing TDS. So even though they are registered, but GTA providing transportation to such registered entities which are government and which have taken registration only for complying with TDS. It means they themselves are not having any outward supply, but since they have to deduct TDS, they have taken registration. Such services of GTA will be exempt. It will be not be taxable. Now here students, I would like to take you to an important amendment. So we just saw the exemption relating to GTA. Now here an important clarification is added that nothing contained in the exemption entry will apply to. It means these will not be considered as GTA and their services will not be exempt under the GTA category. Now, what is the service? The service is the local delivery service, which is provided by e-commerce operator or which is provided through e-commerce operator. Now, what this is? So nowadays we have commonly using apps like Porter, Blinkit, these apps which we are using so that we can send our goods from one place to another within city limits. So when you are using these apps, the services done are of transporting goods within local area. So an explanation has been added in this exemption entry saying that the exemption does not applies to these local delivery services. A parallel exemption is also brought in the definition of GTA, whereby they say that what is GTA? GTA means a person who provides service in relation to transport of goods by road, issues consignment note by whatever name called, but does not include. So from the definition of GT also, they have excluded the same thing. That is where local delivery service is either provided by e-commerce operator or through e-commerce operator. Such local delivery services not eligible for exemption. It is also not covered in the definition of GT. Okay. Let us proceed, students. So this is one important amendment relating to GTL. Next is banking and financial service. Now what it covers. So if you have kept your money in bank in FD and bank is giving you interest, or you have taken loan from bank and you are paying interest, or from any person if you have taken a loan and you are paying interest, the interest on deposits, loans, advances is exempt. In this, there is one exception, interest which is levied on credit card. So where you are using credit card given by bank and the bank levies interest, that is taxable. But in other cases where either bank is giving you interest or you are paying interest to the bank, or you have taken a hand loan, personal loan from some of your known person, the interest on such loan is exempt from GST. Further, when a bank is exchanging foreign currency with another bank or with a money changer, it is exempt. But where you are changing money or exchanging the foreign currency for Indian currency with a bank or a money changer, that is taxable. So please be clear about this. You exchanging foreign currency with bank or money changer, taxable. Bank doing the same exchange of foreign currency with another bank or money changer, that is exempt. Next, as you all know, bank imposes charges on use of debit card, credit card. So whenever you swipe a debit card, credit card, there is some bank charges. Now these bank charges, if up to rupees 2000 for a single transaction, it is exempt from GST. Only where the bank charges are exceeding, sorry, not bank charges, the transaction amount, that is the amount for which you have done the swipe. If that transaction amount is above 2000, then whatever bank charges are levied on that transaction amount, that is taxable. If your transaction amount, your swiping amount is up to 2000, then whatever is the bank charges on that, that is exempt. Next, students, this point is also important, where service is provided by an intermediary of a financial service which is located in multi-service SEZ. So just remember this name, intermediary, were located in a multi-service SEZ with International Financial Service Center, IFSC. So services provided by them is eligible for exemption. Next, we come to life insurance. So life insurance, when it is under some specified scheme, that is exempt, like National Pension Scheme or Army, Navy, Air Force group insurance, or life insurance is provided to Central Armed Forces. These are exempt. Naval group insurance is exempt, or insurance under one of these specific schemes is exempt. Similarly, general insurance under one of these specific schemes is exempt. Now, they have given you a list of schemes of whose insurance premium is exempt from GST. Again, over here, students, if you remember, there is an exemption which was brought in last year, September. Very important exemption from 22nd September onwards. Whatever life insurance or whatever health insurance is given by the insurance company to individuals, not to a group, that is what is eligible for exemption. Just a minute. Yeah, sorry, students. So now from 22nd of September, all personal life insurances and personal health insurances have been made exempt. Why I'm using the word personal? Because they have excluded insurance for a group. Now, what is insurance for a group? That is also clarified, but let us first read this entry. So, service of life insurance provided by an insurer to the insured where the insured is not a group. For the removal of doubt, it is hereby clarified that this exemption shall apply to contract of insurance where the insured is either an individual or an individual and the family of the said individual. So individual with a family, like how many times you do it in case of Mediclaim, is not called as a group. They are eligible for exemption. Further, for purpose of a above, family will mean what? All individuals insured as family in the contract of insurance. So it need not be your very direct close relative, even if anybody is staying with you and that person's insurance is covered in your life insurance common policy, that will be eligible for exemption. Similarly, for health insurance, same condition is given. Now, what is the meaning of group which is not covered? That is also defined by this amendment. So, in the definition part of the notification, they say for the purpose of entries at serial number 36C and 36D, which we just saw, that is individual life insurance and individual health insurance. What will be the meaning of group? Because for a group, if you are taking, it is not eligible. Group means group of persons who join together with a commonality of purpose or for engaging in a common economic activity other than availing insurance. So what they are saying, trying to mean is, so where you are not a family, but you have come together with a commonality of purpose. Means what? There is some common object like you are employer employee, you are partners in a firm. So this is a commonality of purpose. And further, they are clarifying, and it includes what? Employer-employee groups. So wherever the employer takes group insurance for all the employees, that is covered in the group, and it will not be exempt. Where employer-employee relationship exists between the master or the group policyholder and the member. Second, non-employer-employee groups. Now, what this will cover? This will cover groups like firm and partner, company and director. So these are non-employer-employee groups where a clearly evident relationship exists between the master policyholder and the members of the group. So it is, as I gave example, other than employer-employee, what groups are not eligible for exemption is company and directors, firm and its partners, etc. Further, they have also defined health insurance. It means effecting of contract which provides for sickness benefit, medical, surgical, or hospital benefits, whether inpatient, outpatient, travel cover, and personal accident cover. So all these are covered in health insurance, which we also understand. So this is an important amendment relating to insurance. So from now, from 22nd of September 2025, your and mine personal life insurance, our family's life insurance, and our health insurance personal is exempt. Next, services by these specific bodies created by the government, their services are exempt. First is ESI, Employee State Insurance Corporation, EFPO, that is Provident Fund, then CMPFO, which is relating to Coal Mines Provident Fund, then National Pension Trust. All these organizations' activities are exempt. Next, service by way of collecting contribution under the following pension schemes, that is Atal Pension Yojana and any pension scheme of state government is exempt. Next, business facilitator or correspondent service is exempt. So where these business facilitators are providing services to banks, which type of service? With respect to opening accounts in rural areas. So when there is some business facilitator who helps bank to open services in rural areas, their services are exempt. Now, we earlier talked about services given by government which are exempt. Now we are going to talk about services which are received by government which are eligible for exemption. So what are they? Following services, if they are received by the government, are exempt. First is where the government receives services in relation to the functions which are entrusted to municipality panchayat under Article 243W. Now, what it means? So please understand this. So in all our areas, we have municipalities. What the municipality do? They provide the garbage cleaning activity service every morning. Plus, they clean the roads, they maintain the street lamps, etc. These are the common services which are provided by these municipalities. Now, please understand and appreciate this point, students. What they are providing to us is their statutory function under Article 243 GNW. That is already exempt above because that is their outward service. But I'm sure you all would be knowing that for providing these services to us, the municipalities are not running their own garbage collection vans. They have given the contract to some contractor. That contractor is maintaining all the garbage collection vans and all the employees working on the vans, the driver, the helpers. So the municipality has subcontracted their work to outsiders. Now, when they are subcontracting the work, it means now the municipality is receiving a service. So that is what is covered over here. So when where municipality has subcontracted the work of all these things, garbage collection, etc., to a third party, it means that third party is providing these services. And what are the services? It is in relation to the functions which are entrusted by the constitution to these municipalities. These will be exempt. Condition is one, either there should be only labor service, that is no goods should be covered. Two, if goods are covered, then the goods should not exceed 25% of the total transaction value. So whatever is the contract value, in that the share of goods, the proportion of goods should not be more than 1/4, more than 25%. If it is below 1/4, below 25%, that charges will also be exempt. Next, services provided to government authority. What type of service? Water supply, public health, sanitation, conservancy, solid waste management. So again, all these services government is providing us. But to provide us these services, government has outsourced their services. So whoever agency is providing these services to government, their services are exempt. Next, services by fair price shop, what we call as the ration shops. Their services where they are charging a commission or margin to the government, that is exempt. Next, services provided by the government under insurance scheme, where the premium, entire premium is paid by the government, is also exempt. Next, where some training program is conducted, where again 75% or more of the fees is paid by the government. So generally this will happen in case of all those skill development programs which the government is now providing. So if you are joining a skill based program and the fees of that program more than 75% is paid by the government, you have to pay less than 25%, then that particular service is exempt. Next. Next is the service where a state government or a state government body which is called as State Industrial Development Corporation. Like in Maharashtra, we have MIDC, in Gujarat, we have GIDC. So different states have different names. So where these state industrial development corporations, they give the land for more than 30 years lease. So they are giving the land on lease. So all these industrial lands or plots are given by this state industrial development corporation bodies to all the entrepreneurs, and the lease period, if it is more than 30 years, then whatever is the premium charged at the time of giving this lease, which is called as lease premium, that will be exempt. So whenever state government body, which is State Industrial Development Corporation or any other undertaking where at least 20% ownership is with the government. So if any of these entities is giving the plot of land on lease and the lease is of 30 years or more, it is given for industrial purposes. In that case, it will be exempt. What is exempt? The lease premium is exempt. Next important service is service of lawyers. Now, what is the rule? When services of lawyers is given to a common man, it is exempt. Only where it is given to a business, and that also big business, not a small business, that is what is taxable, and that is taxable under RCM. So whenever lawyer is giving services to a business entity is such whose last year turnover exceeds the registration limit, so it is a big business entity or a large business entity, then such legal services are taxable Other than that, all legal services are exempt, and these services are taxable under RC. Next, where a senior advocate is providing services to another advocate or advocate firm, that is taxable, and that is taxable under forward charge. So this is one service of lawyers which is taxable under forward charge. Same rule applies to services given by arbitral tribunal, where they give to a large business entity, only that is taxable. All other services given, that is to individuals or to small business entities, is exempt. Next is sponsorship service. Now, all events that are nowadays held, various TV serials, various web series, various programs, these are sponsored by some business entities who want to promote their business, their products, their brands. Now, when sponsorship services are given, they are taxable service. And if you remember, in some cases, they are also taxable under RCM. Now, in relation to sponsorship, there is also an exemption. What is the exemption? Where the sponsorship is for sporting events only, not for any TV channel or show, it will be taxable. Only where it is for a sporting event, and that too, where the event is organized by a national sports federation or by association of Indian universities in the form of inter-university programs of sports, or by Central Civil Services, or as a part of national games by the Indian Olympic Association, or under Panchayat Yuva Krida Khel Abhiyan scheme. So where under any of these schemes, sporting events are conducted, and for that sporting event, there is sponsorship that is exempt. Other than that, all other sponsorships are taxable. Next, skill development services provided by any one of these people are exempt. Similarly, those who are acting as assessing bodies of the above skill development programs is also exempt. Then, important, performance by an artist. Now, if an artist who is performing in one of the art forms, which may be either folk based or classical based art forms, and it may be either a music or a dance or a theater art form. So you go for Kuchipudi, you go for Bharatnatyam, you go for some Veena concert. In all these, the person who is performing is the artist, and what the person is performing is either a folk or a classical art form. And either if the person is playing some instrument, so it is in music, or if the person is performing some dance or theater, all these cases are covered in the exemption. Now, exemption applies to whom? Exemption applies to the artist. Now, for performing this, the artist will charge some fees, some consideration, if this fees is not exceeding 1,50,000. So the fees charges up to 1,50,000, not more than that. In that case, it is exempt. Where the fees crosses 150, the entire amount becomes taxable. Important. This 150 exemption will also not apply where the artist has performed as a brand ambassador. So where artist is performing for a particular company's brand to promote that brand as a brand ambassador, in that case, even this 150 exemption is not applicable. Any amount paid, 50,000, 40,000, 1 lakh, will also be taxable. But where the artist is not performing as a brand ambassador, in that case, if the charges of that artist is up to 150, will be exempt from GST. Next, admission services. Admission to museum, national park, wildlife sanctuary, tiger reserve, zoo, or to protected monument will be exempt fully. And to these places, if the ticket is up to 500, it will be exempt. What are these places? Circus, dance, theater, award function. So, where the entry fees is not exceeding 500, and it is for a circus, a dance, a ballet, award function, a concert, a pageant, a recognized sporting event, or a planetarium. Up to 500, if the fees is, it is exempt. Beyond 500, it is fully taxable. Next, where your housing society is charging you monthly maintenance, and that monthly maintenance is up to 7,500. So up to 7,500 monthly maintenance is exempt. If your monthly maintenance exceeds that, there will be taxability. Similar, if it is above 1,000, it will be taxable. Next, if you are transferring your running business, which is a going concern, so you are selling the entire business as is. That is not splitting the assets and liabilities, but selling the entire business. And it is a running business, that is as a going concern. Either the whole business or one independent unit thereof. So you have multiple units, you are selling off one entire unit. In such cases, the amount that you are charging for transfer of that going concern business is exempt. Next, services related with transit cargo to Nepal, Bhutan is exempt. Then services by way of renting of residential unit for use as a residence. This is very important entry, students. So wherever you are taking a flat on rent, which is a residential dwelling, and you are going to stay there, you are not going to use that flat as your office. So the flat is not used by you for any commercial activity. It is used by you for your residential activity only. So two conditions: it should be a residential dwelling, that is, it is a flat, and it is also used for residence. Then it will be exempt. However, in this, there is one carve out where this flat is given to a registered person, it will be taxable. And let me inform you, it will be taxable under RCM. So if you are giving your flat to a registered person, it will be taxable. However, let us say you are giving it to a proprietor who is going to stay over there. Now, even though the proprietor is registered under GST law, still the proprietor is not using it for business purpose. The proprietor is using it for his personal residence. Then even though the proprietor is registered, it will not be taxable. Next, nothing contained in this entry will apply to accommodation services for students in students' residences, or accommodation services provided by hostels, camps, or paying guests. Now, why this is separated? Because for them a separate criteria is given. What is the criteria? The criteria is this. So where there is accommodation service for students or any type of working professionals, and the per month charges are not exceeding 20,000, and they are staying for a minimum continuous period of 90 days. When all these three conditions are satisfied, so this you will find in case of hostels, whether of students or of working professionals. So for them, if the monthly rent is not exceeding 20,000, then it will be exempt. If it exceeds 20,000, it will be fully taxable. Next, now you all know India has become a satellite launch hub for the world. So whatever satellite launch services we are providing is exempt. Second, service by way of transporting of goods by aircraft from a place outside India up to the custom station of India is also exempt. Then, very important, service of giving on rent. Now, what you are giving on rent? You are giving on rent the bus. You are giving on rent the bus to whom? To a state transport undertaking. So as you all would be knowing, in every city, the city buses or the local transport which the government runs, the buses are not owned by the government or that transport undertaking. They hire the buses from some private persons. So the private person who is giving on rent these buses to the state transport undertaking, which is generally the state government based transport undertaking, the higher charges for giving the buses on hire is exempt. Condition is the bus should be of a capacity to carry more than 12 passengers, or where it is given to a local authority, it may be electrically operated vehicle, again for carrying more than 12 passengers, or when it is given to a goods transport agency, it is a truck, which is a means for transportation of goods, or it may be a motor vehicle for transportation of students, faculty, to a person providing such services to the school. So in short, here what is covered, students, is the renting of the bus. So you are renting the bus to the bus operator or the truck to the truck operator, who is further going to do the passenger transport, goods transport, or transportation of school children. So here, renting of bus, renting of truck is exempt. Next, toll charges that you are paying is exempt. Then the distribution or transmission charges of electricity is exempt. So in your electricity bill, there will be no tax on this. Similarly, in your electricity bill, many times you avail these facilities. What are they? Service of providing meter on rent, testing of meters, transformers, capacitors, or releasing electricity connections, shifting of meter lines, issuing duplicate bills. All these services which are given by the electricity companies, they are also exempt. Next, services of collecting or providing news by whom? By an independent journalist is exempt. Public libraries is exempt. Next, organizing an exhibition outside India. So where organization of exhibition service is given, but it is for exhibitions which are held outside India. That will be exempt. Next, again, agriculture related one service, service of preconditioning, pre-cooling, ripening, waxing, retail packing or labeling of fruits and vegetables. So where, as you know, nowadays fruits are transported from one corner of India to another, and many times they are exported. But for that, they are firstly treated with one of these things so that the life of the fruit and the vegetable increases and they can be kept alive for a long period of time. So such services done are exempt. Next, services which are provided by cold chain development by way of providing cold chain knowledge dissemination is exempt. Services of foreign diplomatic mission is exempt. Next, public convenience. So wherever you use toilets and laboratories and you pay some charges, that is what is exempt. Service provided by a tour operator to a foreign tourist in relation to a tour conducted wholly outside India. So you have an Indian tour operator, but the tourist is foreigner and the tour is also outside India. And whatever the tour operator is charging to such foreign tourist has been made exempt. That's it, students. So these are some important exemptions. I'll take few questions so that you'll understand how this particular chapter has to be studied. So questions will be something like this. Examine whether the following independent intrastate services are exempt. So first is legal services provided by BMC and Partners Delhi, a partnership firm of advocates. Two, Vastukar Delhi, who is architect and whose turnover of the last financial year is 21 lakhs. Now for this, try to recall what is the exemption. So whenever a lawyer is providing service to an individual, that is fully exempt, or if it is providing to a business entity, that is exempt if the business entity's last year's turnover is below the registration limit. This is what we studied. Now here, the provider is a law firm and the service is legal service. So first limb of the exemption is satisfied. It is providing to a business entity. And what is that business entity? It is a architect service firm. So the second limb is also satisfied that they are providing service to business entity. Now, when they are providing service to business entity, what you have to check is exemption will continue if the business entity's turnover of the last year is below the registration limit. Now, remember one thing, this business entity is in the business of architectural services. And for services, we know the registration limit is 20 lakhs. Now here, since the turnover of this business entity of last year is exceeding the registration limit, which is 20 lakhs, it means here the exemption will not apply and the legal services provided by the law firm to this business entity, which is architect firm, will be taxable. But also you have to add this is taxable under RCM. So the law firm is not required to pay GST on this. Next, minimum balance charges collected by the bank from current account and saving account holders. Now, relating to banking students, if you recall, what we studied was that wherever the bank charges interest on saving account, sorry, not charges, it gives you interest on any of your balances, or it is charging interest on loans deposit. In all these cases, it is exempt. But what is exempt is only the interest amount. Wherever bank levies charges for various services or activities that it is doing for you, that is not covered in interest. So this particular point, which is the minimum balance charge, which is collected by the bank, is not covered in the exemption entry because this is not in the nature of interest. We'll take one more some students. So Shiva Medical Care, a multi-specialty hospital. So now the moment you read this, you have to go to the healthcare service entry. Is a registered supplier in Mumbai. It hires senior doctors, consultants independently without entering into any employer-employee agreement with them. So doctors are working in professional capacity. The doctors and consultants provides consultancy to the inpatients, that is the patients who are admitted to the hospital, without there being any contract with such patients. In return, they are paid the consultancy charges by the hospital. So this is a common thing. So there is a big hospital. On the panel of the hospital, there are multiple doctors who are on the panel. They are not employed. Now, whenever any patient comes, the hospital admits the patient, and then depending upon the requirement, they will ask one of these panel doctors to come and do the treatment. Now, the hospital charges to the patient, they collect the charges for the doctor, and then they pay to the doctor. Now, here the question is, the money actually charged by the hospital from the patient is higher than what they pay to the doctor. Again, this is the common thing. So the hospital many times keeps their margin because they are running the hospital. So they will say that they are paying 5,000 rupees for the doctor, but they may be paying to the doctor 4,000. The difference amount is retained by the hospital, that is retention money, includes charges for providing ancillary service like nursing, infrastructure, paramedic care, etc. Now, the department took a stand that senior doctors and consultants are providing services to the hospital and not to the patient. Hence, the services of the doctors to the hospital is not healthcare and is liable to GST. Now, here, students, there is a specific circular which has clarified that whether the hospital gives service to the patient or the doctor gives service to the hospital. So, when the doctors are providing service to the hospital, in effect, it is for the patients only, and hence the exemption of healthcare continues over here. So the circular clarifies that even the charges paid by the hospital to the doctors will qualify as exemption. So I hope students this is very clear to you all, right? One more example I'll take. So Vedanta Hospital Gurugram has its own restaurant in the basement of the hospital by the name Annapurna Bhavan, which supplies foods to its inpatients, that is patients admitted in the hospital, as per the advice of the doctor or the nutritionist. Annapurna Bhavan also supplies foods to other patients who may not be admitted or their attendants or visitors. Now, the food is prepared by the employees of the hospital and nothing is after. Now, we will take a small break and we'll come back with the next example. that is time of supply of goods and services. So under this topic, we have to revise what are the provisions of time of supply, goods under forward charge, goods under reverse charge. So two categories for goods and same two categories for service, service forward charge, service reverse charge. Besides this, we'll discuss the time of supply for some specific situations like where interest is levied or where the time of supply cannot be determined in normal circumstances. So these are the various provisions that we are going to cover in this particular point. Plus, we will be covering the provisions relating to time of supply wherever there is a change in rate. Now, time of supply for goods, all possibilities is given in only in one section, section 12 of the CGST and the SGST Act. Time of supply for service, all situations is given only in one section, section 13. And the time of supply whenever there is change in rate is given in section 14. So broadly, we'll be studying only three sections of the CGST Act: 12, time of supply of goods; 13, time of supply of service; 14, change in rate. So time of supply, where tax is payable under forward charge for goods, for services. Now for goods, what is the rule? Now remember one thing, student, one thing is clear. Time of supply in all cases will be earliest of certain dates. Now in case of goods, it will be earliest of what? First, the date of invoice. So let us call it as the invoice date or the date which is written printed on the invoice. And the second, the date by which you should have issued the invoice as per provisions of section 31. Now, by what date you should have issued invoice, that is given in section 31. And what does 31 says? In case of normal supply of goods or service, the date of removal or the date of delivery. So in short, you should have issued invoice immediately once you remove the goods or once you give the delivery of the goods. So in case of goods, the last date to issue invoice is immediately on handing over the goods to the customer, either in the form of giving them it delivery or removing the goods for being transported to their place. So two dates, date of invoice, due date of invoice. Now there is one more date, the date on which payment is received. However, goods under forward charge, this rule is presently irrelevant. It means for the transaction of forward charge supply of goods, you will not see the date on which the payment is received. This has to be ignored in the question. You will compare only two dates, date of invoice and due date of invoice. Fine. So this is because of the notification which had come in the first year of GHC itself, that is by 15th of November 2017, where they had clarified that in case for supply of goods you have received any advance, it means the payment is received prior to supply, no GST payment is required, because we are not going to check the date of payment while determining the earliest of the dates. So this rule to be kept in mind, very important point relating to time of supply of goods under forward charge. Then the second scenario is time of supply of goods. Sorry, we'll do one thing. We'll first cover service also, then we'll go to the second type. So next is time of supply under forward charge, and now it is supply of service. Now where it is supply of service, you have to first check whether the service was issued within the time provided. Now what is the time provided for issuing the invoice? The time provided for issuing the invoice is 30 days from the date of provision of service. So you should prepare the invoice within 30 days after you have provided the service. And if you are an insurance company or a banking company or an NBFC, instead of 30, you are given extra 15 days. So it is 45 days, right? Now, what are the possibilities? First, invoice is prepared within the time limit. Now, see, students, the logic is simple. Since the invoice is issued within time, it is a valid invoice. Hence, you will take the date of the invoice as one. This point, which was excluded under service. So, for all service, compare one of receiving payment. It is earliest of these two dates, that is the date of recording in books and the date of actual credit to your bank. So, in this example, again, the date of receiving payment will be today. This date will be compared with the date on which invoice is issued. Whichever is earlier is your time of supply. Second possibility, the invoice was issued late. That is beyond the time period of 30 days or 45 days, as the case may be. Now, in this case, students, simple logic, since the invoice was issued late beyond the time period allowed, we will not consider that invoice as valid for the purpose. And hence, now what we will see is the date on which you had provided the service, compare it with the date of receiving payment, whichever is earlier of these two dates, that is your time of supply. Now, here there is a type of a you can say residuary provision given or a provision given where, let us say, above dates are not available. If above dates are not available with the supplier of service, they say no problem, go to the recipient and see how the recipient or when the recipient has recorded these services in his books. So the date of recording of these services in the books of the recipient will become your date for the purpose of deciding time of supply. So where supplier has not maintained records, you can find out the time of supply from the records of the recipient. Now coming to the second scenario. What is the second scenario? Second scenario is where the transaction is under reverse charge. Again, supply of goods, supply of service. Now students, please make a note. In the previous category, that is transactions which were under forward charge and the supply was of goods, we said we will not consider the date of receiving the payment. Correct? But once the transaction is of reverse charge, even for goods, you have to consider the date of receiving the payment. So this you need to keep in mind that for transaction relating to reverse charge, even for goods, now the date of receiving payment is to be compared. Now here, earliest of which dates? So in case of supply of goods transaction under reverse charge, the time of supply will be earliest of first date on which you receive the goods. Now see, remember one thing here, who is paying the tax? The recipient is paying the tax. So we are looking at it from the point of view of the recipient. So first date is date of receiving the goods. Second is the date of payment as entered in the books of accounts. Correct, whichever is earlier. Now again, what is the date of payment? It is again the date when it is recorded in the books or the date when it is debited in your bank, whichever is earlier. Same logic of what we studied earlier for receiving payment. Here you are making payment. So in both cases, the date of payment is same, either the date of entry in books or in this case, the date on which your bank has shown the debit entry. Now there is a third date also. This date is 31st day from the date of issue of invoice by the supplier. So let us say your supplier has issued his invoice today. So how will you count this date? So today is the date on which the supplier has given you the invoice. So the invoice shows today's date. Today is 11th of July. So we start counting from tomorrow, that is 12th of July. 12th of July to 31st of July. How many days it is? It is 20 days. So up to 31st of July, we have 20 days. Then August month starts. First 10 days of August, 1 to 10th. These are 10 days. So up to 10th of August, it is 30 days. We have to take the date after 30 days, that is the 31st day. So this third point in our example, if the invoice is of today's date, that is 11th of July, our 31st day is falling on 11th of August. So I hope you understood this point, because in case of reverse charge, you have to find earliest of these three dates. One is date of receiving the goods, date on which you made the payment, and 31st day from the date of invoice of the supplier. In case of reverse charge transaction for service, same logic is there. However, date of receipt of goods is not here. So because the receipt of service is very difficult to identify, so they have removed that point. So what are the dates? First is the date on which payment is made. Again, how to identify that? The date on which you make entry in your books, or the date when it is debited from your bank, whichever is earlier. Second is here you are going to take 61st day. So in case of reverse charge transaction of goods, we were taking 31st day from the invoice date. Here you are going to take 61 day from the date of invoice. So same example, today is the date of invoice. And this is a transaction of reverse charge of service. Let us say it is GTA. So we have to count 61st day. So again, today's day will leave today's day. We'll start counting from tomorrow. So from tomorrow up to 31st of July, it is 20 days. Then 31st of August, 31 plus 20, 51 days, correct? So August is complete and the total number of days are 51. We want 60 days. So we'll come to September, 9th of September, 60 days are complete. We want the day following that day, that is the 61st day. So here it will be 10th of September. Fine, students. So this date will be 10th of September. Then another date which is provided is date of issue of invoice by the recipient. In case where invoice is required to be issued by the recipient, invoice should be issued within 30 days from the date of receipt of service. Now, if you remember, students, wherever there is reverse charge, the law requires the recipient to make a self invoice in case the supplier is not registered. So where the supplier is not registered and the invoice is made by the recipient on itself, we call it as self invoice. That date will be this third date. Further, they have said that this invoice should be raised by the recipient within 30 days of date of receipt of service. Again, a residuary rule where above events are not ascertainable, the time of supply will be the date of entry in the books of accounts of the recipient of supply. Next, a specific case is covered, import of service. Now, students, be clear, import of service, whether in normal course or the specific case that is from associated enterprise. So where the import of service is from your associated enterprise, in that case, what you have to see, the date of entry in the books of accounts of the recipient or the date of payment, whichever is earlier. So whenever you are importing service from your own associated enterprise, the date that has to be taken is the date on which you pass entries in your books or the date of you making payment, whichever is earlier. Now, interestingly, this second date may not come anytime. Why? Because since the person sitting outside is your associate enterprise, your own branch, your own firm's another office, possible that you may not be actually making payment. That is why the first date becomes relevant. That is the date of passing the entry in the books. See, since we are associated enterprise, we may not even raise invoice on one another. So there may not be invoice, possibility there may not be payment. So here the provision requires you to take date of entry in the books of accounts as one of the dates. Then we come to time of supply of vouchers. Students, now this has been deleted. So this is not relevant to your exam. This is one amendment which you have to make note. So you can strike out this part. Time of supply of vouchers, that has now been clarified that it is not relevant. Then comes time of supply of goods and services in residuary case. So residuary case means the cases where, let us say, a person has not maintained books, a person has not taken registration, a person is a person who is a tax evader, tax defaulter, and whenever action is taken on such person, then in such cases, how will you determine the time of supply? So the provision says you will take the supply of goods or services in these residual cases where it is not possible to determine the time of supply as above, as where a periodical return is required to be filed, the due date of the return. So it will be 20th of every next month. And in other cases, it will be the date of payment. So let us say wherever it is import of service transaction or inward supply transaction, you will take the date of payment of tax. So two dates which will be taken as the residuary dates. First, the due date of filing of returns. Second, the date of payment of tax. Next, next comes time of supply for addition in value. Now, what is this reason of addition in value? So I have given you 1 month credit to make my payment. So today I have provided you a service. Let us say I have given you consultancy and you are supposed to make payment in 1 month. Now you delay this payment beyond 1 month. Now, when you are delaying this payment, in such cases, I'm going to levy some additional amount in the form of interest, late fees, or penalty. Now, when I'm levying some additional amount in the form of interest, late fees, or penalty for delayed payment, this particular interest will be treated as part of original supply. This is what we are going to study in the valuation chapter also. So first we understand this, even though the nature of this is interest, but the law says we will not treat it as an independent supply of interest. We will treat it as part of value of original supply. So original supply was of goods, we'll consider this interest as value of goods. Original supply was of consulting service, we'll treat interest as consulting service value. So in short, it will not be treated as a separate supply of interest or late fees or penalty. It will be treated as part of the original supply. Now, in such cases, what will be the time of supply? The time of supply for this additional amount in the form of interest late fees will be the date on which the supplier actually receives this interest. So the time of supply is the date of receiving of interest. That's it. Now, there is this important point which also has to be noted. What is that important point? That where you are required to make payment on advance. Now, this will happen in case of services, plus in case of reverse charge transaction, because over there, one of the dates to be compared for time of supply is the date of payment. Now, whenever the payments are made in advance, in all these cases, that is forward charge of service and reverse charge, both of goods and service, the time of supply will fall on the date of advance. Correct? However, there is a relaxation in that. What is the relaxation? If this advance which you are receiving or paying is up to rupees 1,000, so the advance is of a small amount, that is, it is up to 1,000, then in such cases, they say that we will not consider the advance and hence we will not take the advance date as the date of time of supply. In short, in such cases where the advance is of small amount, in that case, and small amount over here means up to 1,000 rupees, in that case, we will take the time of supply, ignoring the date of payment because the payment is of small amount. In that case, it will be taken as your date of invoice itself. Fine. I hope this is clear. Now, now we come to section 14. Now, what does 14 deals with? 14 deals with a scenario whenever there is change in rate. Now, as what happened last year in September, from 22nd of September, majority of goods and services rates were changed, majority of them were slashed. Now, in such cases where there is a change in rate, there is a challenge. What is the challenge? The challenge is that you may have done one of the limbs of this supply before the change and the other limbs are done after the change. Now, in such cases where some part of your supply transaction, like either payment or invoice, has been done before the change and some part is done after the change, in such cases, how will you deal with that transaction? So for that, this particular section 14 says they have identified three dates. First is the actual date of supply, then the date of invoice and the date of payment. Now you have to see what? Simply, it is the majority rule. What is the majority rule? If out of these three dates, any two dates, any two dates are occurring before the change in rate, correct? Then the time of supply is before the change in rate. In short, the old rate will apply. However, if out of these three, any two of these dates are taking place after the change in rate, in that case, the new rate will apply because the time of supply will be considered as the later date, correct? So the simple answer is out of these three dates, date of supply, date of invoice, date of payment. If out of these three dates, any two dates are happening before, you take the old rate. If any two dates are happening after, you take the old rate. So here, if you apply this logic, this answer you get becomes simple and easy. Correct? Now we take students few questions from here. So Kanchanjunga Private Limited supplies goods to Sutlej for rupees 250 on 23rd June. Issues invoice on 25th June. Payment is made on 15th July. Now, firstly, forward charge, reverse charge, forward charge. Secondly, in forward charge, goods or service, goods. Now, the moment it is transaction of forward charge of goods, we know one thing, that the date of payment is not relevant. So we will ignore the date of payment. We will not see the date of payment. We will see only two dates. What are the two dates? Date of invoice and the date on which invoice should have been issued. Now, what is the date on which invoice should have been issued? We saw the rule says, the provision says it is the date of removal, the date of delivery. So in our case, what is the date of removal? 23rd June. This becomes the due date of invoice. Compare it with the actual date of invoice. Out of both these dates, whichever is earlier, we will not consider this date in our discussion. So this payment date will never be considered in deciding time of supply. It will be always earliest of two dates, actual date and the date by which the invoice should have been issued. Fine. So time of supply answer in the first case is 23rd of June. Next case. I buy a set of modular furniture from a retail store. Invoice is issued to me and I make payment. Furniture is delivered to me later in the week when a technician is available to assemble and install. The next day, the rate of tax applicable to module furniture is revised upward, and the store sends me a supplementary invoice with the delivery note accompanying the furniture to collect the differential amount. Is the position correct? See, so this question deals with section 14, that is change in rate. For change in rates, we have to see three dates, and out of three, we have to see where two dates are falling. So first date is the date of invoice. Second is the due date of invoice. Third is the date of payment. Now, if out of these three, two are falling in old and one is falling in new, so the answer will be old rate. So here, as per the information given in the question, two things are happening before. What two things? The furniture, sorry, the invoice is also issued and the payment is made in the old period. Only the delivery is made later. In such case, the answer is old rate will apply. The supplementary invoice given by the mart, the stores, is not correct. Next, an online portal, Best Info, raises invoice for a database access on 21st of February. The payment is made by Roy and Bansal by demand draft on 25th of February, which is received and entered in the books on 20th of February. Best Info encashes the demand draft and thereafter give access to the database to Royal and Bansal Limited from 3rd March. So 3rd March becomes the date of supply. In the meanwhile, the rate of taxes changed from 1st March. Again, you have to check two dates. Out of three, two is happening in the old period. What two? Firstly, the payment is made and also the invoice is raised in the old. Only the actual service is given in the new. So since out of three, two is happening in the old, we apply the old rate. And the time of supply will be earliest of the two. So effectively in this example, the time of supply will be 21st of February. Next, Trust Industries Limited has entered into a contract with VST Limited to supply gas by pipeline to VST for a period of 1 year. As per the terms of the contract, VST shall make monthly payments. Payment for a month shall be made by 7th. Every quarter, Trust Industries shall issue a statement of account showing the quantity and the value of goods, payment received and payment due. Differential amount, if any, as mentioned in the statement, shall be paid. So this is a case, students, of continuous supply of goods. Now for continuous supply of goods, what is time of supply? Students, in case of continuous supply of goods, the time of supply is 1, the date of invoice, 2, the due date of settlement of your account, 3, the date of receipt of payment. These three, you have to decide whichever is earlier, that will be time of supply. Now, what are the details given? So you are required to make monthly payments. So the monthly payments are like this: 5th August, 5th September, 6th October. The payment of 2 lakhs is made in each of the months. 3rd October, statement of account for the quarter July to September is drawn, showing the amount of 256 as unpaid. Correct? And balance 56 is received by the supplier for the quarter ending. So students, here we have to see firstly the dates of payment. 5th August, 5th September, 6th October, 2 lakhs are paid. So first 5th October, 2 lakhs taxable. Next 5th of September, 2 lakhs taxable. Now comes 3rd of October, where the statement of account is drawn and the statement of account is showing a payment of 256 balance. Now in this case, since on 3rd October, which is a prior date to 6th October, the statement of account is drawn and according to that the balance is 256. So for this 256, the time of supply is 3rd of October. So even though you have paid on 6th October 2 lakhs and the balance on 17th October, since these two dates are later dates, they will not be applicable. So the answer is 5th October, 5th August 2 lakhs is taxable. Again 5th September 2 lakhs is taxable. And then 3rd October, the balance 256 is taxable. We'll take one more sum, students. Renu Root Limited enters into a contract with XYZ on 2nd July for a period of 2 years for construction of new building. Now again, student, this is a continuous supply of service. Now for a continuous supply of service, what is the rule? The rule is the time of supply is date of invoice, date of payment, due date of payment. What is due date of payment? Due date of due date of invoice. Due date of invoice is, in case of construction contracts, it is the stage of completion. So you should raise invoice whenever the stage of completion reaches, right? Now here, the contract is for construction of building for a 2 years period. So it is a continuous supply of service. Total consideration is 150 lakhs. As per the terms, Renu Dut is required to make payment at different stages, 50, 75, 100, correct? Now, what are the stages? So firstly, it has made initial booking. What is the initial booking? The amount is 15 lakhs. Then comes the first stage of 50%, then 75%, then 100%. And these respective amounts are paid. Now, how to apply the rule? The rule says date of payment or this due date or the actual date of invoice, whichever is earlier. So one by one, we'll check. First is in case of initial booking. In case of initial booking, all the three dates are same, because in case of initial booking, anyways, you'll first receive payment, then maybe you'll make invoice accordingly. So for all these, the date is 2nd of July. So that becomes your time of supply for 15 lakhs. Then comes 50% completion. Now students, be clear, 50% completion, our total consideration is 150 lakhs, correct? 50% becomes due, which is 75 lakhs. However, you have already paid 15 lakhs. So effectively only 60 lakhs is due. Though 75 lakhs becomes due, but you have already paid 15, so 60 is due. Now, what is the date of various stage? The stage has been completed on 15th of March. Due date of issuance of invoice, 22nd of March. Date of payment, 29th of March. We have to take earliest of this. Earliest is 15th of March. So 60 lakhs becomes taxable on 15th of March. Then comes 75% completion. So 75% completion will be how much, students? So of 150 lakhs, 75% will be 37.5 now. 50% is 75 lakhs. So 75% is 75 plus 37.5. Okay. So on this date, which has come on 20th of June, extra 37.5 is due, right? Total 75 is due, out of which up to 50% has been received already. So what is extra dues? 37.5. Now, again, out of these three dates, whichever is earlier is 20th of June. So on 20th of June, extra 37.5 becomes due. And then comes 100% completion. Then the balance 37.5 lakhs becomes due. Again, the three dates are date of the stage, date of invoice, date of payment. All are same dates. So you will take again 30th of September, and the balance 37.5 will be taxable here. So 15 lakhs, date is 2nd of July. 60 lakhs, the date is 15th of March. 37.5 lakhs, the date is 20th of June. And again 37.5 lakhs, the date is 30th of September. So this is how, students, we find out the time of supply in case of continuous supply of service. Now let us go to the next topic, that is value of supply. Now students, please understand, the value of supply provisions are contained in section 15 of the CGST and the SGST Act. IGST, there is no separate valuation given. It applies the same section 15 to IGST Act, while section 20 of the IGST Act. Now, what does section 15 says? Section 15 says, first, apply section 15 bracket 5. What is 15 bracket 5 saying? 15 bracket 5 says that if there is a value notified by the government, and how it will be notified? It will be notified in a rule. So where the value is notified by the government, you will take the notified value as the value of supply. You will not see anything else. So that is why you have to first check 15.5. 15.5 says if the government has notified the value, it has notified the supply for which the value will be determined in 15.5. You will determine the value of supply of that notified supply as per 15.5, for which you'll have to check the relevant chapter of the valuation rules. Now, if there is no notified supply under 15.5, then you come to 15.1. What does 15.1 says? 15.1 says, I'm putting two conditions. First condition is supply should be made to unrelated person. Second condition is the price which is charged is the only consideration. You should not receive anything separately. So where price is the only consideration and the supply is made to unrelated person, in such cases, the valuation will be done as per 15 bracket 1. Now what does 15 bracket 1 says? 15 bracket 1 says the value will be your transaction value. However, wherever this 15.1 applies, you have to also check 15.2 and 15.3. 15.2 for inclusion, 15.3 for exclusion. But in case any of these conditions are not satisfied, first, supply is made to a related person or price is not the sole consideration, then again you'll have to go to the valuation rules provided in the valuation chapter of the CGST rules. Sorry. Okay. Now, what if you satisfy both these conditions? So there is a supply which is not made to related persons and the price is the sole consideration. In such cases, how do you find out the value? So first rule is value is the transaction value. Now what is transaction value? Transaction value means the price paid or payable for the transaction. In short, whatever is the price which you have agreed with your buyer for the purpose of that supply, that is called as your transaction value. Now for this transaction value, what does 15.1 says? You have to do some additions which are given in 15.2. You'll have to do some reduction which is given in 15.3. Now, what are these additions and reductions? So first we come to additions which are given in 15.2. 1 second, students. Okay. So what does 15.2 says? Now, these things have to be added to your transaction value if it is not already included. First, taxes other than GST. Now, what is this? Many times, even though we have the GST law, there are some taxes which are still levied. Like in case of import of goods, we have the basic custom duty and the other additional custom duties. Second, in case of some states, there are some local cesses, some market fees, some market cess which are levied. Now, these all taxes which are not GST taxes, if any of these taxes are imposed, are levied, then for those taxes, what does the law says? The law says those taxes have to be added in the transaction value and the cumulative value will be considered as the taxable value. So as you know, in case of customs, we apply this, whatever is our import value. In that value, we first add all the custom duty, the basic custom duty, the custom welfare cess, and after adding all these values, then whatever is the cumulative value that is considered for the purpose of computation of the GST, that is the IGST amount. So I'm sure you all remember this, correct? So that is what is first point, that you have to include other taxes. Then comes the second point, third party payments. Now, what are these? So many times it may happen that the supplier was supposed to incur some expenses while making this supply. However, because of some practical difficulties, the supplier could not do that particular expense and the supplier asked you, that is the buyer, to that particular expense. So whenever any obligation of the supplier which is not met by the supplier but which is met by the recipient, and that obligation is in relation to this supply, then the law says the value of such obligation which otherwise the supplier was supposed to do but the supplier did not do, and hence it is required to be done by the recipient, the value of that particular amount has to be included in the value of supply. So the point is, supply, which is the obligation which originally was of supplier, but since the supplier did not do it, hence the recipient had to do it, that particular amount will be included in the value of supply. This is first point. Then comes the next point. The next point is incidental expenses. What is incidental expenses? So many times it may happen that there are some additional amount which the supplier is charging to the recipient. What is this additional amount which the supplier is charging to the recipient? The additional amount is in respect of any extra thing which the supplier has done. What is this extra thing which the supplier has done? So this is, let us say the supplier has arranged for delivery. The supplier is giving packing. Supplier has done some additional work on that particular supply, and that was required to be done as per the contract of the supply. So that will be considered as the value of the supply. Correct? So this is the second item, that is incidental expenses. Then the third item that comes is subsidies. Now this subsidy point, students, you have to be very careful because many times this is misunderstood. So let us say there is some price which you have fixed, and on your price there is a subsidy applicable. Now whenever a subsidy is applicable on your price, then to that extent you will be charging less amount to your buyer because there is a subsidy. Now what does this particular point says? So let us say your price is 100, but because there is a subsidy you are charging only rupees 25 because 75 is the subsidy. Now in this particular case, this 75, if this subsidy is given to you by central government, state government, then it is not included in the value. Your value will remain 25. But if this subsidy of 75 is given by a person other than central or state government, so it may be some private person, it may be some trust, it may be some local authority, in that particular case, you will include that 75 also, and now your value will be 25 plus 75, that is 100, and that 100 will be the taxable value. So what will be included? Subsidy, but given by other than central government or state government. Next comes interest, late fee, penalty. We just saw in the provision of time of supply that wherever the payment is made late, so along with the payment, you may have to pay interest or penalty because you are making the payment late. Now, this amount which you are making payment of interest, that is not considered as an independent supply. That is considered as part of the original supply. Now, in such cases, since it is considered as part of original supply, it is to be treated as part of this value. And for charging this value, the law says you will have to raise a debit note. So this is the fifth item. So what are to be included in transaction value? That is over and above transaction value, taxes other than GST. Then if any amount which was obligation of supplier but was paid by the recipient, then adding any additional amount which the supplier has charged over and above the value of supply, then subsidies given in the price but not by central and state government, and last, interest, late fees, which is levied by the supplier, which is collected by the supplier in addition to the original amount, and this interest was made for late payment, that will also be included. So these are the values which are to be included. Now comes exclusion. For exclusion, what has to be reduced? Only one thing which is reduced is discount. Now, when we talk about discount, the discount can be of two types. First discount is the discount which is given at or before supply and which is recorded on the invoice itself. Means what? Means, so let us say you go to a mall and in the mall there is some offer going on. So now very soon you'll have monsoon offers going on. That even though the price is 100, there is a 60% off. So you pay only 40. Now in this particular case, since the price is 100 and there is a discount of rupees 60, which is reduced from the invoice itself, correct? So when you reduce the 60 rupees from the invoice, the question is tax will be levied on 100 or on 40. So the answer is applying section 15(3) clause 1. This discount which is given on the face of the invoice has to be reduced. So your value will be 40 rupees. Second, if you are giving a post supply discount. So post supply discount is that today the invoice has been prepared for 100 rupees and I have given you 3 months credit period. But I have also mentioned that in case you make the payment before 3 months, then the amount will be reduced and you will have to pay a lower amount. Now, this particular point is covered in section 15, subsection 3, second clause, which is called as post supply discount. Now, what is this post supply discount? So, the post supply discount is the discount which is given after the supply has been made and which is given generally for varied reasons. One reason is because you are making early payment. Second reason many times is because there was a turnover discount or a turnover incentive provided by me and you achieve that turnover, so I'm providing you that discount. Now in these cases, students, remember one thing, there is an amendment in section 15 for this point. What is that amendment? So earlier in this point, there was a condition that there should be a pre-agreement. Pre-agreement means at the time of making supply itself, I had notified to you, I had contracted with you that if you make a early payment, I will give you this post supply discount. Now this condition of prior payment, prior agreement has been removed. So now even if there is no prior agreement, students, as per the amended provision from this amended budget, you will be eligible for this post supply discount. Only condition is that this post supply discount, you should raise a credit note and that credit note once reported in your GSTR 1, it will go to GSTR 2B and the buyer should have accepted that in their IMS. It means the buyer has reversed the ITC. When these conditions are satisfied, your post supply discount will be eligible for deduction. Now relating to post supply discount, there is one amendment. So first is this, the condition that there should be a prior agreement is removed. This is done by the Finance Act 2026. And then the second point is that now there is a circular. What is this circular? So there are varied circulars. The first circular is saying that post supply discount, that is the supply which are given after the supply is made, are allowable as deduction if two conditions are satisfied. First, discount is in terms of agreement, and as I said, this has been removed by the Finance Act. And second, proportionate ITC is reversed. Now here, earlier there was a circular which said that whether or not the buyer has reversed the ITC, you take a certificate from the buyer, and where the value exceeds 5 lakh, the amount exceeds 5 lakhs, then you take a certificate from the CA or CMA of the buyer. Now, since now IMS has been incorporated, now the government will come to know whether the buyer has reversed the credit or not because of the IMS. Hence, this requirement which we are seeing of this circular is no more required. So this circular is as good as ineffective. Yes. Now, there is another circular relating to this post-supply discount. Now, what is this other circular dealing with? Now, relating to post-supply discount, there were many misconceptions. There were many notices being issued across the country. So for that, again, this clarification had come. What is this clarification dealing with? So there were various questions which were raised, and to all those questions, this particular clarification was given. So I'm going through this clarification. So clarification on various doubts relating to the treatment of secondary discount. Now first, whether full input tax credit is available to the recipient of supply, where the recipient make discounted payment to the supplier of goods on account of financial credit note. So as I just mentioned, that for giving this discount, you should raise a credit note and the recipient should have reversed. Now in this, there is one parallel provision, or you can say there is one relaxation. The relaxation is, instead of giving GST credit note, you may also give an accounting credit note. Now, what is an accounting credit note? Accounting credit note is that credit note where you are not going to reverse the GST because it is an accounting credit note. Now, the question is, when does this accounting credit note comes? See, students, the accounting credit note is required wherever the time to raise the GST credit note has expired. Now, we all know what is the time to raise GST credit note. It is next year's 30th of September. So, in case the time to raise this credit note has expired, again, by way of an old circular, they have allowed you to raise accounting credit note. So, many industries followed this practice that they were not reversing their GST because they were raising accounting credit note. Now, whenever accounting credit note was raised, the first question was, if as a supplier, I have raised an accounting credit note, it means I have not reversed my GST liability. Whether as a recipient, are you required to reverse the ITC? That was the first question. So the answer which is given is that the recipient is not required to reverse the ITC. Why? Because when I'm giving accounting credit note, I am not reversing my output GST. So if I'm not reversing my output GST, why should you reverse your input credit? So first point clarified, that in case of accounting credit note, the buyer, the recipient is not required to reverse the ITC. Second question, whether post-sale discount offered by manufacturer to its dealer distributor, this generally happens in case the dealer has achieved a particular turnover. So where a post-sale discount is offered by manufacturer to its dealer distributor, whether it would be treated as a consideration paid by the manufacturer for the dealer supply of goods to the end customer as a monetary value of inducement of supply. So the question was that this amount which I am giving to you as a post-supply discount, will it be considered as an independent consideration for an independent supply? So here the answer is that where there is no agreement between the manufacturer and the end consumer, and there are two independent transactions. One is between the manufacturer and the dealer, the other is between the dealer and the end customer. Now, in this particular case, where there is no agreement between the manufacturer and the end consumer, the post supply discount given the post supply discount given will not be considered as an additional consideration, and the dealer who has got this post supply discount is not required to include that post supply discount in its additional consideration, or is not required to pay GST on that. Next, whether post sale discount given by the manufacturer to the dealer can be treated as a consideration in lieu of activities performed to promote sale of goods. Now, what is this? Many times, some sales promotion activities are done by the dealers, like doing an advertisement or giving some special concessions, etc. Now, when some sales promotion activities are done, if the dealer is collecting the amount of sales promotion activity from the manufacturer, that is the original supplier, then they say that amount will be considered as part of your consideration and the dealer will be required to pay GST on that. So what is given? Where dealer receive post-supply discount, they may engage in promotional activities to boost sales. However, these activities ultimately enhance the sale of goods that the dealer themselves own, thereby increasing their own revenue. In this context, the discount merely reduces the sale price of the goods and is not linked to independent service. Therefore, it is clarified that post-sale offered by the manufacturer will not be considered as a separate consideration. However, GST would be levied in cases where the dealer undertakes specific sales promotion activities such as advertisement campaign, co-branding, etc., etc., and when such services are explicitly stated in the agreement with a clearly defined consideration payable for such activities. In such cases, the dealer provides a distinct services to the supplier and GST will be applicable. So in short, wherever the dealer will recover the amount incurred on these specific sales promotion activities, which the dealer is doing on behalf of manufacturer and hence recovering the amount from the manufacturer, in that case, it will be treated as part of the supply or consideration and the dealer will be required to pay GST. So students, this is uh, a clarification given with relation to post-supply discount. So the rule is post-supply discount can be reduced. First condition, that there should be pre-agreement has been removed. Second condition, there should be proportionate reversal of ITC. Now that will be achieved once I give you a GST credit note and that is reflected in your IMS. And the moment you accept it in IMS, it will go to reduce your GST credit, input tax credit. So the condition will be satisfied. So the old circular requiring certificate from CA, CMA is no more required because that is now achieved through IMS. And whether this post-supply discount, whether when an accounting credit note is given, what would be the treatment? We just discussed the recent circular number 251. Now, students, let us go to some valuation rules. Now, when you require to come to these valuation rules, that you'll understand from the heading of the rule itself. So first, consideration is not wholly in money. So wherever you make a supply and for which the consideration either wholly is in kind or partly in money and partly in kind. Now, in such cases where the consideration is not wholly in money, something is in kind, a question is, how will you determine the value of that consideration? So for such purposes, Rule 27 says value shall be either of the following values. 1. Open market value. 2. Total of money consideration and the amount equal to consideration not in money, in short, fair market value of the kind consideration, value of supplies of like kind or quality, and consideration in money plus money value of non-money consideration computed as per Rule 30 or 31 in that order. Now, in case you are not receiving the full consideration in money form, you have to apply one of these value and most important, you have to go sequentially. First value is what? Open market value. If you have open market value, you will not go to the other values. Now, what is open market value? Open market value is if you are supplying exactly the same goods, the same service to some other person, then whatever is the value you are charging to other person for the same goods, same service which you are supplying to me, that is your open market value. So the price charged by the supplier to other buyers, to other recipients is what is the open market value. What is the value of supplies of like kind or quality? Value of supplies of like kind or quality means the goods or services which you are supplying. If there is any other supplier in the market who may be your competitor and who is supplying exactly the same goods or same service, whatever value that other supplier is charging in the market is what is value of supply of like kind or quality. Fine. Now comes the second rule. When is this rule applicable? This rule is applicable whenever the supply takes place between distinct persons or related persons, but not agent, because for agent you have a separate rule. Now, who are distinct persons? We know your own branch, your own other office, your own other business place, which has a separate GST registration, though coming under the same PAN. That is a distinct person. And then we have a definition of who will come in related person. Now, when you are making a supply with one of them, what will be the value? Now, here transaction value will be rejected because this was one of the conditions of the transaction value that you should not be related. The moment you and your buyer are related, your transaction value is rejected. Now, when transaction value is rejected, how will the valuation be done? It will again be done in this manner, and you have to proceed sequentially. First, open market value, that is price which you are charging to others. Second, value of like kind, which others are charging for same type of goods in the market. And the value determined by rule 30 or 31 that we'll see later. Now, again, here an option is given to the supplier to value such goods as how you have to find out the value at which the recipient is selling the goods further. So you have sold to a related person who is your recipient. Now, if the recipient is selling the goods further, you can take 90% of the price which the recipient is charging to outsider unrelated person. So whatever price the recipient is charging, take 90%, that becomes your value. Another important point is where your recipient is eligible for full ITC. So whatever you are making a supply to the recipient, if the recipient is eligible for full ITC, then whatever you charge in your invoice, even 1 rupee, that will be considered as open market value. In short, it will be accepted as the taxable value. In short, where your recipient to whom you have supplied the goods, who is your related person, your distinct person, if that person is eligible for full ITC for your supply, then whatever value you charge to that person, whether it is less or more, that will be accepted and there will be no challenge to that value. Agent means the agent is supplying to you. Now, in such cases, how the valuation will be done? Again, value has to be done in one of the manners. First, take open market value, or same rule what we studied in the previous case, take 90% of the price which the recipient is charging further to unrelated customers. That value which your recipient, who is now your agent, is charging further, take 90% of that value, that is your value. Or you can proceed with valuation as per rule 3031. Now, what is 3031? You find the reference of this in all the rules. 30 is you can simply do costing, find out the cost of your production, and in case of service, cost of provision of service, and whatever is your cost, make 110%. That will be the price as per rule 30. Rule 31 is a best judgment valuation, which means it is a residuary value, which simply says where you cannot determine value in any of the above manners, then you should value that particular supplier using such method which is reasonable and which is consistent with the principles that we have studied above. So where the value cannot be determined as per any of the above methods, then the last resort is judgmental value. But that judgmental value cannot be arbitrary, cannot be fictitious. It has to follow the provisions or the rules given under section 15 and the valuation rules. And on those lines, you have to determine the value. So this is what is rule 31. Now, for the purpose of supply of service, they are saying you can interchange the sequence of 30 and 31, because otherwise the rule was you have to follow it in sequence. But for supply of service, you can interchange the sequence and you can follow rule 31 first instead of rule 30, because rule 30 was costing based. Now, many times for service, doing costing is difficult. So you can directly apply rule 31 first. Now, we go to some specific valuation rules. with respect to independent supplies. What are these independent supplies? First is supply of lottery. That is a chance to win in a betting, gambling, horse race, in the race club. In all these cases, how the valuation is done. So firstly, for lotteries. Now, where that the value of lottery ticket is including the GST portion. So where it is a state organized lottery, the value is including the GST portion. So the valuation is given as 100 upon 128. Now, since the rate has changed to 40, this will be 100 upon 140. So this is how you will find the value, taxable value of lottery. Next, in case of actionable claim in the form of your chance to win in a betting, gambling, or horse racing in a race club, simply the 100% of the face value of the bet. So whatever is the bet you have put, that value or the bet is considered as the total value. Next, who is the organizing state? So organizing state is the state government which conducts the lottery either within the state or outside the state. Next, what will be the value of online gaming, including online money gaming? Again, the point is, in case of online money gaming, the value will be the total amount which is deposited with the supplier by way of money or money's worth, including virtual digital assets, by or on behalf of the player. So, in short, as a player, when you go online to any online money gaming app, and over there you put any money in your wallet, so the amount which you have put in your wallet for the first time, that becomes the value of supply. Now, whenever you use this amount from your wallet, again it will not be taxed. Let us say if you win something, that amount is again credited to your wallet. When you use that amount, now that amount may be a higher amount because originally you may have deposited 1,000, but you won few games, so now your wallet balance is 1,800. Now the next game that you play, you put the bet of 1,800. They are saying we will not tax it again. So whatever was the original amount deposited by you, that is 1,000, that is only taxable. Then comes rule 31C. So if you go to a casino, in casino, again, on the similar lines of online gaming, what they are saying, whatever amount you pay to buy the chips or tokens. So many times in casino, how do you put the bet? So you have to first buy the chips or tokens from the counter, and then while participating in any game or event, you give that chips or tokens. Now, whatever is the amount which you have paid for the purchase of the chips or tokens, or participating in any event, including game, scheme, etc., in case where token chips are not required. So either where token chips are there, whatever amount you have paid for purchase of the token chips, or where token chips are not there, directly the amount which you are paying for participating in the event, that amount, entire amount, is considered as taxable value. What is clarified? Even let us say at the end, you have some unconsumed chips or tokens which you will return. So that will not be deducted. So any amount returned or refunded by the casino to the player or return of token, coins, chips, tickets otherwise shall not be deducted. So this is common in both. So whatever amount you have deposited in your wallet, if let us say you withdraw some amount, why? Because it is unutilized, it will not be deducted because the tax has to be paid on the first deposit amount. Similarly, over here, whatever is the amount of which you have purchased the chips or tokens, the first purchase amount of chips or tokens is what is taxable, and there will be no deduction even if you return some amount. Then comes again valuation rule for some specific transactions. Here in rule 32, the value is wherever you get foreign currency exchange. Now, whenever you get foreign currency exchange, what is the taxable value? The taxable value is the buy rate or sell rate, correct? That is the rate at which the foreign currency is exchanged minus the RBI reference rate of that given date or point of time multiplied by total units of currency. So let us say per dollar RBI rate is 90, whereas the person from whom you are exchanging it has charged 92. So 92 minus 90, so per dollar 2 rupees will be the value multiplied by number of dollars exchange. So you have got $1,000 exchange. So 2000 will be taxable value. Now, in case if RBI rate is not available, then how you will determine the value? So they have made it a simple assumption 1% of the rupee value received. So when you exchange a currency, so let us say you are exchanging the currency of some African country for which RBI has not determined a rate because generally people do not exchange. In such cases, how valuation will be done? So against that currency which you exchange of an African country, how much did you get? You got rupees 5 lakhs. So take 1% of 5 lakhs, that is 5,000. That will be the value. If currencies exchange are not in INR, now let us say you are exchanging one currency with another foreign currency, then the value is lesser of the two amounts. What two amounts? So whatever you would have got by exchanging both the currencies into money, find into rupees. So you have exchanged euro versus dollar, both are foreign currency. So find out both currencies money value in rupees and whichever is lower, that will be taken as the basis for determining the value. So first is this method. Now, if this method you do not want, then you are given a choice of taking the second method. Second method is like a slab rate. So depending upon the total value of currency which you have exchanged, let us say today you have exchanged the currency worth rupees 10 lakh Indian rupees. Then for out of 10 lakhs for first 1 lakh, 1%. Then for next 9 lakhs, 0.5%. So 1% on 1 lakh, it comes to 1,000. So that will be there for first 1 lakh and the balance because you have exchanged total 10 lakhs. So balance is 9 lakhs on 9 lakhs, 0.5%. If let us say you have exchanged more than that, then amount beyond 10 lakhs, it will be 0.1%, but subject to maximum of 60,000. So total amount that you will pay will be maximum 60,000. This will be the amount. Next, what will be the value in case of booking of tickets by air travel agent? So the value will be 5% of the basic fare in case of domestic bookings, 10% of the basic fare in case of international bookings. Life insurance. Now, in life insurance, students, you should understand we have two types of life insurance policy. One is endowment policy and one is pure life insurance policy. What is endowment policy? Where whatever you are paying today will be returned back to you if nothing happens. It means your amount is not only going for insurance, it is also being invested because you are going to get the amount returned if nothing happens. So, in such cases, how will you find out the value? So, if it is endowment policy, that is where some amount will be going in for investment out of your total premium. Value will be total premium minus the amount which will be going in for investment. A possibility is this amount is not known, that is not disclosed, then it will be at a assumed percentage. What is that assumed percentage? 25% in case of first year premium, and for all subsequent year premiums, it is 12.5%. This is what is the assumed percentage where the amount allocable for investment is not known. Similarly, if it is a single premium policy, where amount is allocated for investment and it is not known, value is 10% of that single premium. Where the policy is not an endowment policy, that is, it is only a policy to cover risk, there is no investment component, value is the entire premium. Next, buying and selling of second-hand goods. So where a dealer is dealing in second-hand goods, the taxable value is selling price minus buying price. And where it is negative, you'll ignore that, there will be no tax. Then, if the purchase value of goods repossessed from unregistered borrower. So in case of banks where they are repossessing goods, where the person who has taken the loan is defaulting, the value of such goods will be determined as purchase price minus 5% per quarter. So if you remember, we have this rule of taking capital goods valuation by taking 5% per quarter. So that rule will be applied over here. Next, in case of coupon voucher, value is the money value of supplies redeemed, but now anyways, this will not be applicable because now coupon vouchers have been treated as neither supply of goods nor supply of service. Notified services between distinct persons without consideration, value is nil if ITC is available. Next, if your case is of pure agent, you satisfy all the conditions of becoming pure agent, then whatever is the value of your service which is coming under pure agent, it shall be excluded from the value. Next, in case of foreign valuation, how do you determine the rate of exchange? Because if your consideration is in foreign currency, you need to convert it into rupees. How do you do that? You require a rate of exchange. So for that, for goods, the rate of exchange will be the rate as notified by the CBIC for the purpose of customs valuation. So when you study customs valuation over there also, this particular rate of exchange is provided because for foreign currency values, you have to convert it to Indian rupees. So over there, they say the rate will be the rate as notified by the CBIC. The same rate which will be notified for custom purposes will be taken for GST purposes when it is supply of goods. When it is supply of service, in that case, we will follow the generally accepted accounting principles and we will take the exchange rate applicable on the date of supply of the service. So we'll apply the accounting standard, and as per accounting standard, whatever is the relevant date for that supply of service, that day's exchange rate we will consider for the purpose of conversion. And then the last rule says that wherever your value which you are charging to your buyer is not showing the GST amount separately, the law presumes that the amount is inclusive of GST. In such cases where the GST is not shown separately and the law presumes it is inclusive, how the valuation will done? The value which is inclusive of GST multiplied by the GST rate divided by 100 plus GST rate. So this is a simple back calculation that we do. This is how valuation is done in case of inclusive values. So students, this is all for today. We have completed all the three allotted topics and I've tried to be as elaborate and as explanatory as possible to cover all aspects. So I hope all the three chapter, all relevant provisions are understood thoroughly. We have also covered the relevant amendments in them. So now you have to revise them at your end by going through all the question answers in the test your knowledge part and also refer to past exam questions and the MTPs, RTPs for better practice. In case you still find any problems, you may connect with us on the BOS and we will try to resolve your queries. So that is all from my side, students, for today's topic, exemption, time of supply, value of supply. Thank you very much and good night to all of you all. Ashok ji, thank you very much, sir. Yes, Ashok. Thank you, sir. Thank you.